On our radar this morning is Unisem, which announced a strong set of third-quarter results last week, Kenanga upgrading it to outperform with a higher target price of RM5.15. The stock, which shot up by over 200% from its trough of RM1.56 on April 3rd, closed at RM4.90. To recap, Unisem swung to a quarterly net profit of about RM50.7 million versus a net loss of RM3.2 million last year. That brings its 9-month earnings to RM81.9 million, meeting 91% of Kenanga's expectations and 84% of the street's estimates. The research house says the results came in above expectations, owing to a surge in orders in both Unisem's Ipoh and Chengdu plants. The closure of its loss-making Batam plant also freed up resources for Unisem to focus on higher-margin products. Looking ahead, the group expects the momentum to continue going into 4Q as its order pipeline remains healthy. Its Chengdu plant is operating at 100% utilization rate, while the Ipoh plant is currently running above the 80% mark. Meanwhile, with pre-orders for the iPhone 12 spiking, Unisem is receiving more orders for its MCM power amplifiers. Demand for MEMS microphones also remains strong as more people use Bluetooth speakers and earphones and virtual assistant speakers. Plus, the rebound in China's car sales spell demand for tire pressure monitoring systems, which bodes well for Unisem's automotive segment. Based on data from Bursa Marketplace, there are 3 buys and 6 holds on Unisem, with target prices ranging from RM5.86 to RM2.85. That works out to an average target price of RM4.41, which is actually 49 cents lower than the stock's closing price of RM4.90.